Hey guys, I'm here with my brother Grant. He's done quite well as far as investing goes, and I figured I'd just do a short interview, 15, 20 minutes maximum, just about investing and how he's done. And I thought he could give me some insights or answer some basic questions, and I thought it might be relevant to some other people, so I just figured I would put it up online and uh, interview, and I guess we'll discuss his portfolio, what he's learned, who he learns from, and some of his best and worst investments. So this is Grant. You have anything to say about
Well, no, yeah, thank you for the
disclosure?
introduction. Just a short disclosure. I mean, nothing what I say is meant as investment advice. I mean, everyone, certainly do your own due diligence, but definitely look forward to the conversation.
Okay, nice. Well, I guess starting out, how did you get into investing, and what were the most, what were the books or people that you've learned the most from, and how has that impacted you and how you've invested?
Sure. So Warren Buffett, I mean, definitely was kind of someone I always looked up to, and his framework was such an interesting one, and how he made investors and people around him billions of dollars throughout the years. I mean, his principles that he had are very time tested, and his ability to look at stocks as not just things that move around, but really as the companies that give them underlying value, and trying to understand how they will do long term and what trends could impact their ability to be successful. So I think just learning as much as one can from Warren Buffett and certainly
And
other
how do you learn
investors
from
as
him?
well.
From books or from YouTube videos, or what's the?
Yeah, so it's we're lucky in the sense that I mean he is so much content of him speaking on the internet. I mean, there's all of his annual meeting stuff where he and Charlie Munger talk about business, and I mean, just a treasure trove of insights that one can gain from Warren Buffett.
Mhm.
And so that's what I've tried to have as try to replicate it at least in some small way.
Mhm. Okay, so I guess uh, when you find company, like how do you go about finding companies? Like how do you learn about them? What's the main way you find out about these companies? Because there's so many companies out there. How
Yeah,
do you choose? Like what do you?
it's a good question. I think a lot of it is just a lot of blocking and tackling work by looking at as many companies as you can, as many publicly traded companies as you can, and try to get familiarity with different industries and analyze kind of how companies have done and see what changes are currently going on and seeing if they can keep their performance or improve it over time. So yeah, I mean, reading annual reports and quarterly earnings calls, I mean, those are pretty important material to look at. Um, I think when I started out as an investor, kind of my initial industry that I had the most comfort with was banking, but it's certainly expanded since then. I mean, home building,
So
technology
you invest
companies,
in
and so forth.
Dreamfinder Homes. How do you find out about that company?
Yeah, so Dreamfinders Homes is my currently my biggest investment in my portfolio, a home builder located in the southeast part of the country. I found out about that one by just looking at hundreds of different companies, getting a spreadsheet of companies that
So
had
you just
recently
look at
gone
like
public.
all like
And
on which traded on which exchanges or whatever. Like you just look at the whole list and you like pick out a random company and start looking into it.
yeah, I mean, I certainly have gone over all the companies in the S&P 500, the Russell 1000, and just going through, trying to go through as many publicly traded companies in the United States as possible
So not in other
is what I
countries.
typically not. I mean, I think the United States, we have very fertile ground for the best companies in the world being located here. So I think for the most part, just spend on American companies. But Dreamfinders Homes is a very good example of a company that was in an industry that was a little bit misunderstood. I mean, I bought that position in, gosh, it'd be 2022, early 2022, when interest rates were going up, and the market thought the business was going to do very badly because mortgage rates were increasing so much. But what happened is people were less likely to move because they locked in interest rates in their current
Mm-hmm.
housing, and so the resale market wasn't there, and so the home building market was where a lot of buyers were going to. And I think Yeah, and so that company has a very good track record. Dream Finders Homes, returns of equity since inception for the company around 40%, and buying in near book value was a very fortunate thing to be able to do. And I will own that company, that position 10, 15, 20 years from now, hopefully. And I think the key thing in terms of supply and demand is that since 2008 and 2009, the annual, I guess, new builds that we've had in the United States has been averaged around 1 million new starts, and the equilibrium for supply and demand is 1.5 million, give or take. So we've structurally underbuilt, and that bodes well.
Is there
for
a
the
reason why
returns.
it's structurally underbuilt?
I mean, I think part of it is after 08, the home builders were in a very difficult position financially. They had a lot of land on their balance sheet, which was kind of constricting their ability to invest a lot and grow the amount of homes that they're building. Right. And I think that's also, but home building is a very difficult thing to scale. In home building, it's not easy. I mean, building is to have high levels of quality control. I mean, it's not the easiest thing. So I think that also is a factor, and that kind of flows into the amount of people going to the trades as well. But I think Dream Finders Homes they have a land light strategy in their balance sheet, so that they don't own a ton of land. I mean, and they copied the business model of NVR, which went bankrupt a couple of decades ago. But since then, they did not put land on their balance sheet, and they're over a 200 bagger. So their value of the stock went up 200 times.
The market
NVR.
value
Correct.
of the company?
Yeah.
Over how long?
Probably a little bit over 20 years, went over 200 times. And Dream Finders Homes replicated the strategy. And, Patrick Zalewski, the CEO of Dream Finders Homes, very, very good CEO. And I think NVR also, a lot of how they did as well as they would always buy back stock. I mean, that was a key way for their capital allocation. Dream Finders Homes is...
Dream Finders Home buyback stock?
They do have a buyback authority or plan, but they don't really do that. They've historically bought companies, and they've expanded operationally.
Like bought other construction companies? Right.
Yes, they bought a home builder in Texas that has done very well. So I think Dream Finders Homes is part of the reason why I like them a little bit more than NVR, given they have more buckets to look at in terms of their capital allocation.
So what metrics do you look at when you're investing in companies? Like, are there certain metrics that are most important to you?
There are some, I think, especially the quantitative ones. I mean, price to earnings and price to book value, making sure the numbers look okay. But I think there's no rules of thumb in investing.
Price to earnings, isn't that like the most looked at marker?
Right. And exactly. I think typically if a company has very high price to earnings, there might be a very good reason for it, and that they have an advantaged position in terms of their market, but also returns in equity as well. I think you can get somewhat of a good framework of how profitable the base operations of a company is, given
so that's like their returns on the amount of assets and all that stuff that they have.
Yeah. And I think, the numbers, another investment of mine is Intel. And I mean, their price to earnings isn't terrible. But I think also a key part of that investment is you're investing in a very high quality technology company, and with themes like AI, I mean, they're very much going to be kind of a pipeline to innovation in the country. And, their addressable market is extremely big. So you can only be as...
And there aren't a lot of chip-making companies in the U.S.
Right. Very high barriers to entry. I mean, that business model is kind of like a treadmill, very easy to fall off, and it's a oligopoly in terms of the manufacturers of leading edge semiconductors.
So those are the metrics that you look at? Is that pretty much it?
Yeah, I mean, I think metrics of the numbers making sense, but also more indexed to the management team, making sure the culture is good.
Yeah, so do you look at the leadership of companies? Is that like something that you actually dive into?
It is, yeah. Certainly. I think
only for companies that you have a big position in, or any investment?
Probably any investment, but especially
But
companies that have
not
a
knowing
bigger
these people, how do you
position
know? How do you
size.
know if they're good or not? I mean, like,
Sure. I think a lot of it is the track record that you have to kind of look at. I mean, there is, and you can look at earnings calls, annual letters, and things of that nature. But Intel, I mean, they were struggling quite a lot. Their previous CEO, before Pat Gelsinger, who's the current CEO, they had a big issue improving their process node manufacturing. And essentially what happened is the other chip makers used an equipment vendor and Intel did not. And so that led them to a big disadvantage in their process manufacturing. But Pat Gelsinger and kind of the executive team now in place, they have just much better execution. I mean, the co-founder of Intel once said, I mean, what can be done can be outdone. And that ethos is kind of coming back to Intel, which is a very favorable thing. But it's not, you're never going to be 100% right in terms of how you gauge a management team.
when you say management, are you looking mostly at the CEO?
CEO primarily, I mean, that's.
Do you like pay attention to their age or how long? Like you mentioned Elon Musk, like he's in his 50s or whatever. Is that a negative sign that somebody's older or something? Like,
I think ideally you would have an executive that is extremely good and young, but at the same time,
like 40 or something.
right? Yeah, like Patrick Zalewski of Dreamfinders Homes.
Well, especially at a company
has
where
a lot of
the CEO is so
runway ahead of
important, like Elon Musk. Like maybe that's different for other types of things.
Sure, but I think also you have to. I mean, the CEO is very important, but you also have to realize that that person is not going to be there forever, and at the end of the day, the business is what's going to be left. And
But so
making
then
sure
the
that-
board of directors would be important too, because they're appointing the new leadership.
I think having a good board is good, but the board typically, from a day-to-day perspective,
Yeah,
doesn't
yeah.
have as much.
How would you
impact
gauge if the
compared to
board
the
is
executive team?
good or not?
Well, I mean, who they choose as the leader of the company, the CEO. If the CEO is of good quality and integrity, I mean, I think that's the best reflection of whether the board has done their job or not.
So how long do you hold stocks, and like when do you decide if you should sell a stock? Like what?
I think the best holding time is almost forever, if you will. I mean, companies that remain earning very high returns in equity, and I never buy to sell in the medium term. Always buy to hold for hopefully decades is kind of the goal. I mean, Dreamfinders Homes, Intel, Metro City Bank, which is a bank in the southeast that their clientele is Korean Americans, for the most part, and they have good returns in equity, and their credit risk that they're taking is not concerning, and they have a lot of capital reserves as well. So those three companies will hold hopefully for at least 10 years, if not much longer. And I think all of them have very good runways ahead of them, and I mean that's kind of the ideal holding period.
So what are your best investments and your worst investments? In the past, I guess, or I mean, it could be now.
Well, I would say, starting with my worst investments I've made, investing in biotechnology, I think, hasn't necessarily done well. Luckily, I never invested a large part of the portfolio by any means. And I think biotechnology, I mean, that's just a very difficult business in the sense of your expenses are upfront, the probability of success is uncertain, and then your revenue is longer term in the future. And it's a very difficult thing to gauge, even if there's promising clinical data and things of that sort. I think another field, I mean, energy as well. Investing in that field, I've never done extremely well, but so that's another thing. Best investments I've ever made, invested in an insurance company called Trion Insurance Group, and shortly after investing in it, it got bought out by a private equity firm and more than doubled in value in terms of the price that it got bought out at, which was a very nice thing. But I think my best investments are still ones that I'm holding. I mean, Dreamfinders Homes, I was fortunate enough to buy in at single digit number in terms of the stock price, and hope to hold that again for many decades in the future.
Hmm.
But
So when do you decide you get to sell a company? Like when you're like, I can't do this, like I need to, like how do you know when to sell? Because people know when to buy, but a lot of times they don't know when to sell.
I think the rule of thumb that I probably use is default on not selling. The default is not to sell. I think if the intrinsic value of the company is significantly less than what the stock is trading at, then you should think about it. But that should
How do you
be,
know if it's less than?
I would say, a combination of just qualitative and quantitative. I mean, if the price to earnings is a irrational number and the underlying fundamentals of the business in terms of how it will do in the medium to long term aren't as positive
Like
as the
looking at
price is being
revenue
paid.
or stuff like
Right.
that.
Yeah, and that's kind of how I look at it. I mean, but typically I always default on holding. I mean, yeah, I mean, Intel would be maybe a good example of that. I mean, I bought in, say, at the $50 per share level, a very small amount, and then it went from 50 to $25 a share, and that's where I made most of my position. I entered into the company, and I mean, what happened is the semiconductor industry is cyclical, and there was an over build out in terms of inventory, and that hurt Intel. But long term, I knew that that company would do well, and so I thought it was undervalued. I mean, their foundry business, so their manufacturing for third parties, is emerging under the new leadership team. And man, I mean, I think the largest competitor to Intel in terms of the foundry is called TSMC.
Yeah,
That is
who
a
knows
half
how
a
that's
trillion
gonna
dollar
play out.
company, and Intel, I think, is probably more innovative than TSMC. I mean,
Hmm.
in developing kind of technology for process manufacturing. And so I think that will do quite well. And data center products too for Intel, I think will be able to compete and at least be a reasonable alternative to NVIDIA, and compete with AMD as well in the future.
So is there anything else you think a listener would find interesting that I haven't asked or um, that we haven't touched on?
Well, yeah, no, I think you had very good questions. Investing, I think, very much it's a fun activity, and to be able to invest for the long term. I think the error of the market that I've maybe seen in kind of my experience investing is that it's a little bit too short term sighted. Where in, say, COVID, the companies that had the vaccines, Moderna and, say, Peloton, were doing extremely well because they had a lot of revenue and profitability from activities that weren't super long term in nature. And then the market kind of flipped where things like home builders were at a very depressed valuation because interest rates were going up, and yet if you could buy in at that time, you'd likely do very well. And I think you can take advantage of that, but I think just getting familiarity with as many companies as possible and using a good framework from time-tested people like Warren Buffett and Charlie Munger, I think that will serve you very well. And just always having high conviction in the companies that you do hold and knowing them very well and having a lot of due diligence and understanding in a given industry, I think will allow you to hold when prices or when stock prices are very volatile, and use that volatility as your friend and not your enemy.
Yeah, so you're saying things are too focused on quarterly earning reports and short-sighted, things like that.
I think so. I think that is probably what I would say. I think, and I think, man, there is such an opportunity out there in terms of artificial intelligence and kind of how that will improve productivity for the economy.
And that'll
Not
probably
just in the next
change
couple of years,
investing
but
as well.
next
I don't
couple
know
of
for the
decades.
best, but I'm sure people are applying that to investing as well.
Right. Yeah, I mean, certainly, that will change kind of investing and how that market is structured. But yeah, it will be interesting next couple of decades.
All right. Well, I guess, is there anything else you want to talk about? Because we're at 20 minutes. So, or do you think that's about good?
I think that's good. No, very good questions, and I'm sure there's some topics that we could devote
Yeah, we can always
an
come
hour
back
to,
if
and
people are interested.
if if people are interested.
Yeah. Well, we appreciate you watching and hope you learned something. And we're signing off. Thank you.